Hello traders, in this video, we will discuss in details the various aspects on consumer sentiment data and its impact on currencies, stocks, and commodities. Stick around to learn how to trade the consumer sentiment data in a professional and profitable manner. We begin by highlighting that consumer sentiment serves as a crucial indicator of economic health, reflecting the overall mood and outlook of consumers regarding their financial situation and also the broader economy. Through surveys like the University of Michigan Consumer Sentiment Index, which gathers insights from approximately 500 consumers, traders gain valuable insights into consumer financial confidence and also the perceptions of the current and the future economic conditions. Consumer sentiment data provides a snapshot of consumer attitudes towards the economy, thereby offering a glimpse into their spending intentions, investment outlook, and overall confidence levels. As such, by analyzing this data, traders can better understand consumer behavior and anticipate potential shifts in market sentiment, which can have significant implications for various asset classes. Consumer sentiment directly influences consumer behavior, which is a driving force behind economic growth. Typically, a positive sentiment indicates optimism and confidence among consumers, leading to increased spending and economic activity. In contrast, a negative sentiment signals pessimism and uncertainty, potentially resulting in reduced consumer spending and economic slowdown. The significance of consumer sentiment lies in its ability to gauge consumer confidence, which in turn impacts consumer spending patterns, investment decisions, and overall economic activity. As a matter of fact, a confident consumer is more likely to make discretionary purchases, invest in assets, and also contribute to economic growth, while, on the other hand, a cautious or pessimistic consumer may adopt a more conservative approach, leading to decreased spending and subdued economic expansion. Traders closely monitor consumer sentiment data to assess the health of the economy and anticipate potential market trends. Positive sentiment readings often coincide with bullish market conditions, as investors interpret increased consumer confidence as a sign of economic strength and potential market growth. On the other hand, negative sentiment readings may trigger concerns about economic stability and market volatility, thereby prompting investors and traders to adopt a more defensive stance. It is important to note that traders have to take note that consumer sentiment plays a significant role in shaping investor sentiment and market dynamics, and particularly in the stock market. Typically, positive sentiment readings are generally viewed as bullish for stocks, as they indicate increased consumer spending and economic growth prospects. As a matter of fact, companies across various sectors tend to benefit from higher consumer confidence, leading to improved earnings and stock performance. In a positive consumer sentiment environment, businesses experience stronger demand for their products and services, which translates into higher sales and profitability. This, in turn, drives stock prices higher as investors anticipate increased corporate earnings and future growth potential. As a result, sectors that are closely tied to consumer spending, including retail, hospitality, and consumer discretionary, often outperform during periods of positive consumer sentiment. In contrast, negative consumer sentiment readings can weigh on stock prices as they signal weaker consumer demand and economic uncertainty. In such environments, businesses may face challenges in generating revenue and profitability, leading to downward pressure on stock prices. Sectors that rely heavily on consumer spending may also experience declines, while defensive sectors such as utilities and healthcare may attract investors that are seeking stable returns during the market volatility. Consumer sentiment data also influences currency markets or forex markets, particularly the value of the US dollar. The US dollar is often regarded as a safe haven currency and is sensitive to changes in market sentiment and economic outlook. Typically, positive consumer sentiment readings support the US dollar as they signal a stronger economy and increased confidence in the US financial markets. A positive consumer sentiment reading may attract foreign investment in the US economy, leading to capital inflows and increased demand for the US dollar. This can result in upward pressure on the US dollar exchange rate against other currencies in the forex market. Additionally, a robust US economy may lead to expectations of higher interest rates by the Federal Reserve, further bolstering the attractiveness of the US dollar to investors. In contrast, negative consumer sentiment readings may weaken the US dollar as they indicate a lack of confidence in the economy and potential risk aversion amongst investors. In such a scenario, traders may seek safe haven currencies or assets, leading to downward pressure on the US dollar exchange rate. Additionally, conditions or concerns about economic stability and market volatility may prompt investors to sell the US dollar denominated assets, which would further contribute to US dollar weakness. The consumer sentiment data also has influence on the price of commodities such as gold, which is often viewed as a safe haven asset during times of economic uncertainty and market volatility. Typically, positive consumer sentiment readings indicating a strong and resilient economy may reduce the appeal of gold as a safe haven asset, leading to downward pressure on its price. In a positive consumer sentiment environment, investors may favor riskier assets of a safe haven investment like gold as they become more confident in the economy prospects. This can result in reduced demand for the gold and lower prices in the commodity market. Additionally, positive sentiment readings may lead to expectations of higher interest rates, which can further weigh on gold prices as it becomes less attractive compared to interest-bearing assets. In contrast, negative consumer sentiment readings signaling economic weakness or instability may increase demand for gold as investors seek refuge from riskier assets. During periods of economic uncertainty or market turbulence, gold tends to outperform other assets as investors flock to its perceived safety and store of value characteristics. As a result, negative sentiment readings may lead to increased demand for gold and higher prices in the commodity market. Traders have to note that consumer sentiment is a key indicator of economic health and market sentiment, providing valuable insights for traders across various asset classes. By monitoring consumer sentiment data and understanding its implications for different markets, traders can make informed trading decisions and capitalize on potential trading opportunities. As we finalize, it is paramount to mention that the University of Michigan Consumer Sentiment Index, along with other consumer sentiment surveys, offers a comprehensive view of consumer attitudes and expectations. As such, it plays a significant role in helping traders gauge consumer confidence and also anticipate market trends. It follows that whether a trader is trading stocks, forex, or currencies, or whether they are trading commodities, understanding consumer sentiment is essential for navigating dynamic market conditions and also identifying profitable trading opportunities. Thank you for watching. Let us interact again in our next trading video.